Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. As always, new morning, fresh morning, new tweets, old tweets, new headlines, but markets not doing very much. Flattish for the last couple of days, and the indication is this morning also it's going to be something like that. I'm Prashant, with me my colleague Surabhi and Nigel. Guys, morning.
Hi, morning Prashant, morning Nigel. And you know that jubilation that you would expect across markets because there's a China-US trade deal, that's not happening. Because I think markets have started wondering whether this is true, is this final, not. Still plenty of tweets and plenty of comments to go over.
Well, that's right. You know, Trump and the negotiations with China continue to remain in focus. And I think overnight, the geopolitical issues as well have crept up a little bit with regard to tensions in the Middle East. So let's see how things pan out on that front.
Yeah. And I was coming in and I was in the morning. It's become so humid in Bombay, right? Without any rain. And I was thinking, well, rain started early, right? Rains hit
earlier than usual. The arrival was earlier than usual, yeah.
Maybe they'll pick up, right? And they need to pick up. So that's another thing at the margin, which we kind of sort of need to track. And maybe we'll speak with IMD and SkyMed, etc., in terms of where are the clouds and where are the rains. Not very much indication of it yet. But okay, let's just take it from the top in terms of US markets, right? And that's of course, I mean, in terms of equities, not very much at all. As you can see on your screen, S&P was down about 0.25%. 0.5% lower on the Nasdaq, so this is neither here nor there. The 10-year yield lost about 5 basis points to about 4.42. Oil prices, though, are the one. Actually, we should have put the 5% number there. Let's just stick with oil. Just go back to the earlier graphic. Oil is up 5%. That's the, a big headline, and that's at about $70.40. So after a while, we've hit that $70 mark, and this is on the back of reports that U.S. Embassy in Iraq is preparing for an ordered evacuation due to heightened security risks in the region. So basically, the first report came out. Let's move along. The first report came out from Reuters, which essentially said this. But the report did not specify which risk, which geopolitical risk. There are other reports which suggest that, that Iran perhaps could strike some of the military bases in the region. For this to be effective, there has to be a State Department order, which I think is still not come through. But the point is, prices went up, and I think prices are up a little bit more this morning as well after yesterday's move that we saw. So keep an eye. This is, of course, important for India for a variety of reasons. The big one, of course, being that we are a very large oil importer. On the tariff front, you had President Trump who essentially said, and this came through later, but President Trump said that he's planning to send his trading partners, US's trading partners, letters of these universal tariffs in the next 1 to 2 weeks. Now, this would be earlier than the July 9th deadline, when these tariffs are anyway supposed to take, that self-imposed July 9th deadline, when these tariffs are supposed to take effect. So now President Trump is suggesting we're going to send it earlier than expected. Markets are not really too bothered in that sense, because you have people like Scott Bessent, etc., saying that it's possible that good faith negotiations will continue even after 9th of July. I mean, the president will allow for it if he's not going to sort of stick with that self-imposed deadline. So, and I think that's the base case for the market as well. That deadline is there, but is that like a hard stop? Or or is it possible that with important trading partners and negotiations are going on, talks can continue beyond that as well? I think the answer perhaps is yes, and that's the market understanding. The dollar index was down sharply, was about 0.65 lower. That's a broader dollar, 98.45 on that one. Now, yesterday evening, you also had President Trump announcing that US-China have reached a trade deal framework. This is, of course, after the talks in London, although tariff rates are not clear. In terms of these, what's the exchange? The flashpoint was rare earth minerals. President Trump said China will supply rare earth and magnets, and the US will allow Chinese students into colleges and universities. University access for rare earth minerals. I mean, we'll see where this one goes. What was being talked about, of course, is rare earth in exchange for high-tech, NVIDIA high-end chip technology and sort of China being able to access those, but no word on that yet. The other bit was this tariff rates, right? So Trump said that we are getting a total of 55%, China is getting 10%. Again, we need more clarity on what this 55% number is made up of. And I think that's the reason why there was no big reaction in that sense in terms of risk on or anything of that sort. Now, just to tie in the levels, Nifty has been flat for the last few trading sessions. And I think we get a similar kind of day today as well. Support stands at the 40-hourly exponential average, which is 25,011. Resistance comes in at 25,310. And then the 20-day moving, the 17.6% retracement is 25,310. Bank Nifty, for the Nifty Bank, supports come in at 56,395, which is the 40-hourly, and then 55,695, which is 675, which is the 20-day moving average. And on the way up, we basically need to take out the recent high of 57,049. GIFT Nifty gives you a quick sense of how we're likely to start, about 30 points higher. Surabhi.
Yeah, absolutely. So I guess oil is the big headline, and that's the sort of the new joker in the pack, because no one was working with this escalation to about 70, and this morning as well, prices are just below that mark. As President Trump, he indicated this yesterday as well. We took note of this in our morning conversations yesterday also, that he's saying he's disappointed with Iran. And he's going on to say that something has happened to them, and I'm much less confident of a deal being made now. Anyway, let's come to the other tweet. And this is the tweet on, or the post on, the deal with China. He says that it's subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied upfront by China. Likewise, we will provide to China what was agreed, including Chinese students using our colleges, universities. And he says, which has always been good with me. Suddenly, he's very supportive of Chinese students in the US. And then, of course, the issue is, and I think that's what he's taking back to his electorate, that we're still levying 55% tariff on China. China is only levying 10% on us. So now look at the market reaction, and Asian markets are not rising in jubilation or anything. In fact, there's some red on the screens. Most of the markets in the region are pretty range-bound. Japan is lower. And if you look at the mainland Chinese markets, the Hong Kong markets, they're also down. I mean, Hang Seng is down about 0.6%. So, it's kind of markets are taking it in their stride, so to speak. The other piece, of course, is we have to watch out for these quote-unquote good faith negotiations that Prashant was talking about as well, because this came in from Scott Bessent, and he's saying that there could be a reprieve to countries which are negotiating in good faith. And he singled out EU as one such territory. He didn't name us, didn't name India. But let's see what that really means. The other point beyond trade yesterday was the US inflation number, and that's where there is relief, because at least right now, inflation is not spiking in the US. And he mentioned that, President Trump, in one of the tweets again, that inflation is coming down under me. So let's see. The numbers are not beginning to show up the issues. The rate was 0.1% month-on-month increase. The estimate was 0.2%. And even if you're looking at it year-on-year, 2.4%, which was in line with estimates, the core inflation number was actually a lot lower than estimates at 0.1%. For us, the market has been consolidating through and through, and not much has changed on the Nifty. But yes, yesterday the Nifty did manage to stay at least above the 25,100 handle. However, the mid-cap market chose to take a bit of a breather. Now, whether that was routine profit booking or if there is a pattern building up in prices, we'll find out today. On the flows picture, FII's net sellers yesterday sold off stocks worth about 446 crores. Domestic institutions were buyers. Once again, they bought cash equity worth almost 1,600 crores. So that was a good piece. And I'll specifically watch out for FMCG stocks today, because India has decided to slash the import duty on crude edible oil imports from 20% to 10%. So watch out for a lot of FMCG players, because palm oil is part of this bunch of edible oils where the duty has been slashed. So let's watch out for the FMCG pack. So that's how the setup looks like for the time being. Nigel, what are you looking at?
Well, let's focus on the top cues then. First up, if you look at crude oil prices, they're spiked up a little bit, which for India market perspective, it's negative, though it's still below that $70 per handle mark. So still too soon for us to worry. But that's been a bit of a spike because of geopolitical tensions. Next up, the inflation print that came out of the United States was softer than expected, which is good news. And now, out there, the probability of the Fed cutting rates has gone up to around 68%. For a September 2025 cut itself. So we'll keep an eye out on that front. And finally, today is Thursday, so we'll have the weekly expiry as well that will play out. So those are the top cues for the day. Just before we get to trade setup, I just want to point out something that Motilal Oswal has put out in their note. They are talking about the profit, as a percentage of GDP. That's moved up to around 4.7%. And that's the highest we have seen in the last 17 years. The last time we saw a number of around 5% approximately was all the way in 2008. So that's good times. And they're calling this the phase 3. We went through a cycle when in fact we were at 5%, then we went down to around 2.5%. And this is the phase 3 cycle, which is a good sign in terms of profitability as well. Getting back to trade setup though, what happened in yesterday's trading session with regard to the FI position on index futures? Well, they covered some shorts, they added long positions. The short positioning comes down from around 83% approximately. It's come down to around 78% in the last few trading sessions. And that short covering that we've been talking about, I recall that when we were at 1 lakh short contracts, I was telling our viewers that we like that. You like to see some shorts in the system. Because in case the markets find their momentum and you get a bit of a bazooka move or a positive news flow coming in from the RBI, then in fact you do see that those shorts do get covered out. So from around 1.07 lakh contracts on the short side, that's come down to around 86,000 contracts. So clearly a bit of short covering bounce has already played out. But today, since it's weekly expiry, we'll keep an eye out on the options data. And the 25,250 call, fairly active. 25,100 put as well, fairly active. You punch in the premiums and you get a broad range that you're looking at for the day itself. So on the upside, you're looking at that 25,250 to 25,300 odd mark. That becomes the important resistance mark. But going by the options data, that's the number that I'm looking at, 25,280 on the upside. On the downside, going by the writing that we have seen at around that 25,100 put, 25,060, that's the level you want to get to see some kind of support on the downside. So that's about trade setup. But stocks, they're going to be in the news. And the one I'm going to be looking at is MCX. Remember, it's seen a big run in the last few trading sessions. Yesterday, it gave up some part of that. Now, NSE has got SEBI's approval for the launch of monthly electricity futures contracts. So, earlier this week, the street was celebrating when MCX got the green signal. Now, you'll have some competition. NSE as well has got that. And also, if you look at the traded volumes for the past month, they did spike up in the month of April, but from then on, it's been cooling off. I was referring to a Motilal Oswal note. So maybe MCX, after the big run, could see some kind of pressure. Let's see how that goes. Next up, I'm looking at two metal stocks from the same group itself, Vedanta as well as Hindustan Zinc. Now, Vedanta, in the last 1 month or so, it's up only around 15% approximately. But Hindustan Zinc is up close to around 28%. Now, if you just pull up a dual chart between the two, you'll want to see whether or not from here on, Vedanta can actually outperform both Hindustan Zinc, because valuation-wise, Vedanta is a little bit cheaper. And in Hindustan Zinc, always the fear is when the stock runs up, there could be some supply that comes into the market. So I'll keep an eye out on both these two, a bit of a pair trade out here. For the last month, Hindustan Zinc has outperformed. Can Vedanta outperform from here? That's the one that I'll be tracking.
All right, Nigel, thanks very much for that. Arvind Sanger is now with us. He's managing partner at Geosphere Capital Management. He's with us after a while. Arvind, great to have you with us here on the program. Thank you very much. Rare earth minerals for Chinese students into US universities. What do you make of it, Arvind? It's like, inventing something out of thin air and then saying, well, I'm giving you this, which was already allowed. But then what's your sense?
My sense is that if that's the deal, then the US got the better end of the deal, right? Because rare earths is critical minerals. And the student ban was more of a last minute sleight of hand. And don't forget, it wasn't just students. They announced they will allow resumption of ethane exports. Now, ethane is a petrochemical product that is not critical at all from a U.S. standpoint, but it is critical for some of these petrochemical plants that have been set up in China. So these are ways that the U.S. has been able to get the rare earth thing solved. So I think it sounds like a reasonable deal. Maybe Trump is actually delivering on some of his trade deals if this is what it turns out to be. But time will tell. But I think the market has gotten used to, as we all know, the term taco has come into vogue. But in this case, it sounds like Trump may have gotten a decent deal for the U.S. But time will tell. I don't think anybody can write any chapter here assuming that U.S.-China relationships is back to normal. I think that disentanglement and that disassociation is slowly going to continue, this deal notwithstanding.
We've not heard, the main thing is we've not heard from the Chinese side yet. I don't think, at least I've not seen a headline, right? And I think President Trump said, this is all contingent on me and President Xi approving it. So he kind of announced it, and then, so that's the big one.
Yeah, I think we need to wait and watch what happens. But The question is, did Chinese get enough from the deal as they wanted, or not? So, again, I think it would be nice to get it out of the way, but it's still, like you said, one-sided news so far.
Hi, Arvind. Good to have you on. But, amidst all this, the markets just kept on marching higher, right? And the US market's also done okay, despite whatever's going on, despite whatever's happening in LA, for that matter. So what's the sense? The whole talk of rotation of money away from US assets, has that talk started dying down because the market's all right? Or do you still see that diversification will remain a big theme in the months ahead?
I think, notwithstanding the fact that we've gotten over the Liberation Day shock and things are not as bad as expected, and certainly today's CPI data confirmed that inflation, despite all the uncertainty and the turmoil, inflation hasn't crept up, and growth numbers generally look okay. So I think, U.S. still, even for a lot of people, reality, the medium to long term, it's the U.S. deficit or it's the U.S. desire for a weaker dollar. All of those have not gone away. And therefore, I still continue to believe that on a structural basis, diversifying into some of the developed markets like Europe, which have been laggards, as well as some of the major emerging markets, is probably going to be the more prudent trade, rather than in the last 15 years putting all your eggs in the U.S. basket was a way to create significant outperformance.
When you're talking about diversifying into emerging markets or into Asia, Europe, fine. I mean, that's become a sort of consensus thought now. Off late, the South Korean market has been getting a lot of money. In fact, it's just done so well. I don't know if that's at the expense of India or whether, it was anyway, positioned very good in terms of valuation, so therefore it's getting the money. But what's your sense?
Look, you're going to have weeks, months, days when some markets will outperform on the other. So I don't necessarily pay that much attention to these very short-term gyrations. I think the India story, as you were just talking a few minutes ago, the earnings story seems to be on an uptrend. If we continue to see some other data improve, although some of the other data has not been quite as strong, whether it's electricity demand or it's auto demand or some of the others, we'd like to see more bottom-up data suggesting that the economic rebound is in full force. Obviously, the RBI's 50 basis point rate cut is clearly going to be helpful. And I met with a few financials, and there was optimism about loan demand, starting to uptick. So if you can see animal, it's going on the economic front. Then the market economic spirits, the market animal spirits, which have been in full force last year without the economics being quite as good, can then be supported by good economic data.
Hi, Arvind. Good morning. Good to see you. When talking a little bit about the US and the central bank out there, the odds of a rate cut went up overnight, post that softer than expected inflation data. What are you factoring in? President Trump wants 100 basis points. He's been putting pressure out there. A lot of talk on that front, little that he can do. But what are you penciling in with regard to Fed rate cut action for the remainder of this year?
Well, look, at the end of the day, Fed is going to be data dependent. And if we get confirmation, PCE is the one that they pay most close attention to. There were a lot of good underlying stats within the CPI number that seem to suggest that maybe things are turning more benign. We'll wait and see how the other data comes, whether it's the PPI or it is the PCE. And it's not going to be just 1 month's data, right? So June is not enough for them to kind of declare victory and move on. But if we get a couple of months of confirmation, then clearly, I think a 25 basis point rate cut certainly becomes very likely. A 50 basis point is usually more of an emergency move. If they thought 100 basis point is really if the economy or employment or something else were in deep trouble. I think our base case remains 25 basis points, and I assume, as the market is expecting September, maybe it's a little earlier, but I think our assumption is that it'll be September.
Okay, Arvind.
Not to forget, oil is a wild card now. We have to keep an eye on oil. We haven't talked about that. So, oil is the wild card. Is something going to happen with Iran? is something blooming, and that could upset a lot of calculations.
Absolutely, and I think, and of course, I mean, all of this feeds into what the Fed will do, and then what the Fed will do will feed into what maybe we do at the margin as well. We've kind of sort of front-loaded in a big way, and anything further will depend on how much room there is in the global easing cycle as well. Thanks very much, Arvind. Appreciate you joining us with some of that perspective. Well, we'll take a quick commercial break here, but let me just quickly run you through some of the interactions which are lined up here on the program. 8:35 in the morning, you'll have the management of Maruti talking to us about the impact of these rare earth curbs. Looks like they've pulled back some of the plans for their, e-SUV model in terms of what they plan to produce and how much they are going to do now. 9 o'clock, you'll have Amnish Agarwal of PL Capital to talk about the impact on this Maharashtra excise duty hike on, Alcobev. We have Gautam Shah on technicals at 9:20 with markets in focus. Praveer Sinha, MD and CEO at Tata Power, will be with us on their renewable plans. Vinod Agarwal of VE Commercial Vehicles will be speaking with us at 9:40 on the May auto sales numbers. And of course, for the outlook as well, 9:50, Premier Energies will talk to us about the recent blocks, anything further coming, and capex plans. And towards the end, it's our special segment, Indianomics, Latha in conversation with former RBI deputy governors and bankers on whether RBI is moving towards lowering restrictions on banks. Interesting conversation lined up.
Time to slip into a short break, where we're going to go full throttle on stocks on the other side in our special top 10 segment. For the time being, I give you a sneak peek into the list. Sterlite Tech, Bilcon, AG Infra, ONGC, Oil India, they'll all be reacting to positive news flow. Add to the list, we'll have, Oil India, as well as on the flip side, you have MapMy India, MCX, Paytm, Asian Paints, BPCL. They'll be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Well, we've been looking at Asian rates, and many of them are on the downside. Most of the markets, actually, the key ones, Japan, Hong Kong, even mainland China is very, very flat. So no excitement around any breakthrough deal with the US, not showing up in stocks at least today. Let's pull up the implied open. Yesterday, we spent the bulk of the day doing nothing on the Nifty, and the broader market, I mean, that was also feeling a little bit of that weight. Today, the indication at least is that we could be starting about 20 points higher. What about individual stocks? Well, let's straight away get to the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Plenty of stocks to go over. Let's first start with all the block action as always. And I think Vivek is picking up something on CE Infosystems. Vivek, morning.
Good morning. That's right. CE Infosystems, or better known as MapMy India, a significant block deal is expected today. PhonePe Private, that holds over 18.5% stake in the company, today is looking to pair close to 5% of the total equity. The floor price for this particular block is at 1,750 rupees a share, indicating a little over 10% discount to yesterday's closing price. When you're talking about the total deal size, it's over 470 crores. Expect some pressure on CE Infosystems, at least at the open in today's trading session.
Okay, Vivek, thanks a lot for that. Well, let's hop across to Vamakshi. She's tracking two stocks, Paytm as well as MCX. Morning, Vamakshi.
Good morning, Nigel. Let me first start off with MCX. NSE has received SEBI's approval to launch monthly electricity futures contract and it therefore has become the second exchange after MCX got the approval earlier this week. Keep in mind that, a month ago, SEBI had already granted an in-principle approval to NSE for electricity derivatives, and NSE in fact confirmed that in a call as well. And in the con call, they further added that the company has an advantage in this market due to its advanced technology as compared to some of its other players. So the approval coming in from SEBI for NSE was largely expected, but given the kind of move that we saw on MCX earlier this week, it's a sentiment negative because of the competition that comes through from NSE. The next stock on my radar is Paytm. Keep in mind that the Finance Ministry has clarified. They say that there is no plan to levy MDR charge on UPI transactions. MDR is basically the merchant discount fees, and it is the fee charged to merchants for accepting digital payments, which is usually a percentage of the transaction amount. Currently, there is no MDR in place on UPI transactions as well as RuPay debit card payments, but the reintroduction was expected to be a positive for Paytm, given that it could allow the company to monetize its payment gateway services more effectively, but this has not come through, and therefore negative for Paytm, going with the red for this counter as well.
All right. Well, lots of talk around this MDR reintroduction, right? And for now, not happening. That's the indication. So keep an eye out on these names, Paytm, and then, of course, MCX as well. Let's talk about more stocks with news flow. Vivek is here with that list. Vivek, good morning.
Well, good morning. A couple of order wins is what we are tracking. First, keep an eye out for Sterlite Technology, the company along with Dilcon, and this is an arm of Sterlite called as Global Services, which is the demerged business vertical. So the company has entered into an agreement with BSNL, and this is for construction operation as well as maintenance of a network under BharatNet. This is for the states of Jammu and Kashmir as well as Ladakh. The total order size is over 2,630 crore, where the capex portion is 1,620 crore, and there are two separate opex portions, both at 972 crore as well as 38 crore. The other stock in focus is HG Infra. A long-term supply agreement is what the company has entered into. Now, the company has emerged into a lowest bidder as for a transmission project in Odisha, and this is for a project where the awarding was done by Power Finance Corp. So the company will be the transmission service provider, and they will provide interstate transmission systems. This is for the Eastern Region Generation Scheme. Transmission charges that the company will accrue is close to 43 crores per year.
Okay, all right, got that, Vivek. Thanks very much for those names. Let's quickly move on. Crude oil obviously is the big headline. So let's get to Manisha, because a lot of stocks would be in focus. Oil marketing companies, of course, for one. But let's talk about what's led to this move to $70 a barrel. Manisha, morning.
Thank you for that, Subhi. Absolutely. 2-month highs for the Brent prices and 10-week highs for the U.S. crude prices is how we are trading, and a 5% of a gain in the overnight markets there. 3 or 4 factors that you should keep an eye on. One is the rising tensions between U.S. and Iran, with Iran threatening to strike U.S. bases if nuclear negotiations fall. The second is the U.S. and China trade negotiation progress is supporting the prices. Third is that the softer than expected U.S. consumer inflation data perhaps would support a rate cut by the month of September. And the fourth important point is the U.S. crude stocks, which have declined by 3.6 million barrels in the previous week. The estimate was for 2 million barrels, but we have seen a bigger draw come in for the crude inventories, and that in turn also has been supportive.
All right, Manisha, thank you very much for that. So that's oil very much in focus. We'll run you through a quick recap of what our stocks are this morning. So stocks start with positive news flow are Sterlite Tech, Dilcon, HG Infra, ONGC and Oil India. Stocks with negative news flow are MapMy India, MCX, Paytm, Asian Paints and BPCL. We'll take a quick commercial break here. We're going to come back in just a bit from now. And we talk stocks, Deepan Mehta, with some fundamental stock conversation. We'll also have the management of Maruti Suzuki talking about the implications of these rare earth export curbs, some of which seems to be now resolving itself. Coming up. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call. Well, we have listed on all the top stocks you need to track. And so for the time being, let's get some fundamental analysis going. Deepan Mehta, Director at Elixir Equities, joins us on the show. Hi, Deepan. Good morning. Good to see you. Well, I want to talk about a large deal or large order that's been backed by Sterlite as well as Dilcon, with regard to this BharatNet program. So the order has come through. What is your view on both these two stocks? The way I understand it is Sterlite does the fiber. Company like Dilcon, NCC, they'll do the EPC part of it. And the last mile will be Tejas Networks. So your view on this order and what do you like from the value chain?
Good morning, Nigel, and thank you for having me on your show. I think about time that Tejas and Sterlite got orders. Because if you see the performance for the last few quarters or so, Sterlite actually has been reporting losses, and Tejas, we have seen a sharp decline in profitability, but it's a volatile business, lumpy business. So I think it's great news for all the companies put together. But I would still like to, wait and watch for more orders to come through and the order build up to offer more visibility. From valuation perspective, I think Sterlite Technologies is quite attractive, about 3,700 crores type of market capitalization, and such a huge order certainly will drive the growth and maybe take the company to a new growth phase as well. So if you want to play this particular development, I think the best way to do would be through Sterlite Technologies. As I understand, the order for Tejas is not that big as compared to the size of the operations.
Okay, all right. So that's BharatNet and, how to look at the potential beneficiaries. Deepan, hi, morning. Let's talk about the potential beneficiaries of these electricity futures. The market first thought it'll be MCX. Now NSE is saying we also have, we're also going to launch this particular product. What's your sense? And anyway, let's broaden it up. I mean, exchange and then BSE yesterday, there's a lot of worry about volumes coming down and the premium turnover again falling. So let's get your quick take. IEX, MCX and BSE.
Yeah, good morning, Surbhi. I think it's an avoid for me, especially IEX because of that particular regulatory framework which may come through, which may take away their edge. I think it's called coupling. Secondly, I don't know how that will affect the electricity futures on NSE as well as MCX. In any case, I think such futures will take very long for these two exchanges to really scale up, and avoid BSE and MCX because of the valuation. Although we are invested in MCX and it's turned out to be a great investment, but at these levels and these kind of valuations, I think going at 70, 80 times or so, it doesn't really make sense despite being a monopoly. And BSE Limited, I think still a lot of regulatory risks over there, which we would have taken had it not be for the high valuations.
Okay, all right. So stay away from the exchanges. That's the advice. By the way, I mean, we'll discuss auto stocks as well in just a bit, because this big issue around the rare earth magnet crisis has been cropping up. And you just saw the flashes at the bottom of your screen. Hyundai, for instance, is saying that it's going to tap into the parent company to source rare earth magnets. And now we have news coming in from Maruti as well. Maruti has told CNBC-TV18 that there is no disruption in the production of the e-Vitara due to the rare earth magnet crisis. The automaker adds that there is no change in launch timings for the car either. Parikshit caught up with Senior Executive Officer Corporate Affairs of the company, Rahul Bharti, to discuss this entire matter, and also spoke about the 5-star Bharat NCAP rating which Maruti has received for the Dzire.
We are so happy to receive the 5-star BNCAP certificate straight from the Honorable Minister of Road Transport and Highways, Shri Nitin Gadkari. And we got another certificate for 4 stars for the Baleno. And they are very high ratings. They go beyond compliance for customer safety. And I think it will go a long way in giving confidence to our customers that their cars are really engineered well for safety.
Right. Could you give us a sense of how many models of Maruti Suzuki in total have received the Bharat NCAP ratings, and what has been the average rating? And also, what is the kind of investment that Maruti Suzuki is making in order to make its cars safer for customers?
So at the moment, we have received it for 2 models, but they are different from the rest of the pattern of industry, because industry has about 15 SUVs. All the certificates in industry so far, BNCAP, have only been on SUVs. This is the first time that a sedan and a hatchback has received certification, and that too of a good number. The price of the car would have gone up by a few thousand rupees, but we think it's money well spent, because it's for the safety of the customers, their family and friends. And of course, for the engineering and development, we would have spent between 100 to 200 crores on this.
All right. I would also like to turn your attention, sir, to a very pressing issue for the industry, that of restrictions of rare earth magnets, their exports from China. We have been getting reports that Maruti Suzuki has slashed its outlook for the e-Vitara production from somewhere like 26,500 units between April to September to somewhere around 8,200. Could you give us a sense about how and to what extent the production of the e-Vitara has been impacted?
Let me explain. Regarding the situation on rare earth, as of now, there is no disruption in our operation due to this issue. There is, of course, a lot of uncertainty, and the situation is evolving continuously. So we are monitoring the situation, and we are pursuing multiple solutions to ensure continuity in our operations. The launch timings don't change. if and when there is any material impact to our business, we'll come back to and we'll inform all shareholders or all stakeholders in line with the regulatory requirements.
Right. But the production numbers have not been impacted. You're saying the launch timelines are not delayed, but are the production numbers not impacted at all?
There is no material impact. See, small changes in production schedule keep happening all the time across several issues. If there is any material impact, we'll come and share.
Okay. Could you give us a sense of what exactly with the launch timeline for the e-Vitara in terms of their sales in India and also exports?
So let's keep in mind that this is a global model which will be exporting to about 100 countries of the world, including Europe and Japan, and of course, India, the domestic market. So the timings have to be staggered. It's pragmatically not possible to serve all the markets on a single date. So these would be staggered, and we hope to do it within the first half of the year.
Okay. I would also like to ask you about your current inventory of rare earth magnets. Some car makers and some two-wheeler makers have gone on to say that their production could come to a halt. Till how long can Maruti Suzuki manage with the current inventory of rare earth magnets?
The way to look at it is not just inventory, it is assurance from all possible sources. So we are, as our chairman also mentioned, till July, we don't see a problem. After that, there is, of course, uncertainty, but that's part of business.
Right. And are you expecting the company to make certain changes to production of ICE models also? If this rare earth issue is not resolved, will you make adjustments in the production cycle to prioritize certain models? The way Suzuki has done with the Swift globally in Japan?
So all the options are on the table, but we have not, there is nothing at the moment that is in the public domain about this issue.
Okay. My final question to you, sir. How do you think the industry and government can manage this? There are a lot of delegations which are meeting the government on a day-to-day basis. There is hope that the industry delegation will visit China and there will be some sort of breakthrough. What is the contingency planning that is required? And what are some of the alternatives that you are considering in terms of meeting your requirements for rare earth? Because some companies are considering importing assemblies from China as well.
So you're right, Parikshit. All kinds of solutions are being evaluated. Industry is in regular touch with the government. And of course, the communication is happening at all levels. And alternate solutions like having aggregates or assemblies are also being evaluated. There are other evaluations going on about sourcing rare earth from elsewhere, from within India, if exploration and availability is possible. So all kinds of options are being studied. And industry is in regular discussion with the government.
Mr. Bharti, I would also like to ask you about the progress that you've made in terms of having 6 airbags across your portfolio. Have you managed to have this installed all across Maruti cars?
Yes, almost, Parikshit. So this year, we will have 100% of our models across all variants fitted with airbags as a standard fitment all across. And we are quite advanced at this stage. For example, by July, 97% of our sales by volume will be with 6 airbag fitment. So you have been waiting for it quite some time, I remember, and I think it will be a very positive and happy news for our customers who can expect a lot of safety for themselves, for their families and friends that travel in our cars.
All right, so that's the management of Maruti Suzuki then. Deepan, you heard that conversation. What's your view on the stock and what do you like from the auto space?
Yeah, Nigel, I saw the interview, and I think management was quite cautious over there. In any case, I think Maruti has been steadily losing market share, and that is a cause for concern. Within the entire auto space, our preference is for M&M. We have discussed this company before also. I think they have the best EV strategy, and I'm convinced that EV is the way forward, and to an extent, Maruti is behind the curve. Also, in terms of new model launches, I think there's not that exciting lineup as far as Maruti is concerned, and also competition is increasing from Chinese manufacturers and other unlisted players. So I would be a bit cautious on Maruti and other listed auto players, with the exception of M&M. And of course, in the two-wheeler space, I don't need to say our favorite stock. So
My favorite bike, your favorite stock.
Okay, that's Aisha. Go on.
That's Aisha, yeah. Okay, all right. Deepan, I wanted to ask you about Paytm as well. What's the view on that particular name? The stock's very quietly, it's been perking up. It listed around that 2,000 rupee mark, crashed to a fourth of its price. And in the last few months, it's gradually started moving towards 1,000 rupees. And the buzz is that Q1 will be a very, very strong quarter, but they've guided more or less on that front. Do you think it has more room to move up?
Nigel, I think we are constructive on Paytm, and there is, I would say, a certain level of calm performance coming through as far as the company is concerned. They are not making any major announcements or any ambitious plans. They're just focusing on executing their strategy. They're trying to diversify their revenue stream, and some of the new revenue kind of products which they have got, which is selling financial products, that is gradually scaling up well. They are clearly taking full advantage of the platform and the number of users which come on the platform as well. And some of the loss-making kind of ventures are being curtailed. So I think at some point of time, Paytm will turn out to be a great fintech company. And if you're a patient investor in that, then you will reap the fruits of the adapt those particular strategy. But you need to have a slightly longer term view, 3-5 years or so, and you should be able to stomach the volatility which comes with the earnings of such companies.
Okay, all right. So probably not a smooth ride, but if you have the risk appetite, then maybe it is for you. Got that. Deepan, thanks for that. We'll take a very quick break, come back on the other side, and we will have our technical experts joining in. Look at the trading setup today. Nitesh Thakkar and Sudarshan Sukhani joining in. Welcome back. Just about 15 minutes to go, less than 15 actually, before we start getting our pre-open rates. The implied open is telling us that we'll probably get a 20-point upstart. To begin with, we have Sudarshan Sukhani and Nitesh Thakkar joining in with some trading ideas. Gentlemen, good morning. So the thing is, the market is, maybe it's not really moving higher with momentum, but it's also not falling. So Nitesh, let me open with you. Index calls, I mean, would you want to play the index today on the long side at all? Or is it still in no trade zone?
Good morning, sir. So, we've been maintaining a long bias, and last 3 days, post that breakout beyond 25,050, the momentum which should accompany a breakout is slightly missing. So, a good way is that, we haven't got any sell signals yet. So, a good way is to trail the stop loss slightly on a tighter basis. And I have recommended levels of around 25,080 on this spot, which is about 60-65 points lower from here. As you're trading the stop loss level. So as long as we are above this gap which happened on Monday, and that reversal will happen below 25,030, I think maintain a long bias, but don't be very aggressive, because very clearly, as I said, the momentum post the breakout is slightly missing.
And Nitesh, on the Nifty Bank, because that's the index for 2 days running, it's showing some weakness.
See, similarly, the Bank Nifty was outperforming, and then it made a fresh high, significantly higher high than the previous highs which it had made, and went up to as high as about 57,050. Again, I think here, I have advised trailing the stop loss to about 56,200, 180 zones. I think just below that. So as long as we are above that, maintain a long bias. But again, as I said, both the indices have clearly shown some lack of momentum on the upside. So not very keen to aggressively add on to long positions in the indices at least. But yeah, on stock specific basis, our bias is on the upside.
Okay, all right. By the way, just take note of the block that's taken place at the bottom of your screen. We'll try to get you further details, but the street was sensing that there is a large trade in the works with regard to Asian Paints, and it appears, at least as of now, majority of that has got cleared up. 3.64% equity changing hands in the block window. Keep an eye out on the stock. That was the sense. Last few trading sessions, it's been a little bit weakish, anticipating this block. Now that's got out of the way, so we'll keep an eye out on that one. Let's go across to Sudarshan though. Sudarshan, tell us, what is your call on the index first?
Yeah, good morning. Well, for the last 3 days, the market has shown a complete lack of momentum. And now I get a sense that maybe the Nifty is preparing itself to enter into another trading range. And this could be a protracted range, just as we saw the last time it was a 1 month range. Now, this is not yet sure, and the levels of that range are not clear. But there is a sense that this may be possible. If that is so, then trades should be avoided as much as you can. If you have long positions, keep a very tight stop loss at 25,000 for the Nifty and 50 and a similar stop for the Bank Nifty. But below 25,000, just step aside and wait for the market to find its ranges.
Okay, fair enough. So both our experts are advising the same, that if you're long, keep stops tight and keep an eye out on them very, very carefully. All right, let's talk about stocks then. Mitesh, what's on the list today?
So I still have an all buy list. Infosys amongst the IT names have been something which I've recommended for the last few days. Infosys is the next one, which has given a breakout yesterday. Buy here with a stop at 1608. Look for targets of around 1675. Buy on Gas Authority with a stop at 195.5 for targets of 210. Also buy on Kotak Bank with a stop at 2120 for targets of 2200, and Biocon is the final call. Keep a stop at 347. Look for targets of 370.
Okay. All right. By the way, those block trades keep happening. That block window, I think, is more buzzing than the overall trading session. Nothing happens during the day. Everything happens during this block window. That was Asian Paints with over 3%, and now there's Eternal. And let's see, Vivek was telling us that we're expecting a block on CE Infosystems, MapMy India as well. Coming to stocks, Sudarshan, your list today?
Well, it's still an all-buy list. Chambal Fertilizers is a buy. There's been a sharp correction. Maybe that correction is coming to an end. Buy with a stop under 554. Hero Motocorp continues to be a buying opportunity on every day buy with a stop under 43.30. ITC is a buy. ITC, after some time, suggests that it is putting its act together. Buy with a stop under 417. And Siemens, remember, Siemens has also gone ex-bonus. So it's a buying opportunity with a stop under 3,300. So there is an all-buy list.
All buy list. Okay, got it. Thanks for that, gentlemen. We'll come back to you closer to market opening. Need to take a very quick break right now. We'll come back on the other side. Of course, we'll have the pre-opening rates. And also, we get chatting with Avnish Agrawal of PL Capital. We'll talk about this excise duty hike that Maharashtra announced, and that had sent stocks spiraling lower yesterday. So how do you look at names like United Spirits in this environment? We discuss that with Avnish.
Welcome back. Hope you're having a good morning. In the next minute or so, we'll start getting the pre-open rates that will come in next 2 to 3 minutes. And then, in fact, we'll proceed with trade for today. But for the time being, let's hop across to Deepan Mehta, who's still with us. Deepan, we had a large trade that took place on Asian Paints. Now, part of the street was anticipating this. This block is out of the way. Now, it's a large block, 3.5 crore shares, amounting to close to around $1 billion. Your view on this name, the street is very, very divided on this. Some believe that the supremacy will continue and the stock has spent enough time at these levels, while the other part of the street says, no, competition is really revving up out here. And the challengers will continue to remain in focus, and that means the one that's held fort will continue to remain under pressure. What is your view on Asian Paints from here on?
Nigel, I'll go with the latter view. It is becoming more and more of a red ocean in the paint industry, and the incumbents are under severe pressure. The challengers are kind of doubling down. You saw what Jindal Group did in terms of buying Axo, and also Grasim also is not letting off. It is going very aggressive in the paint industry. There are smaller players like Astral also which are revving up. So I think that from like a 2-3 player industry, it's going to become like a 8-10 player industry. And all of these players, the new entrants, have got deep pockets, and it's going to eventually lead to lower margins, lower return ratios. And at some point of time, it's going to impact the valuations also of the companies over there. So for me, Asian Paints and other paint companies are an avoid, and every rally is an opportunity to exit from these companies.
Okay, all right, got that. Deepan, I also wanted to ask you about Z. They have 2 board meetings that are lined up to plan the next few years. Now, the promoter entity, after many, many years, started creeping into the stock, if I'm not mistaken, at around 100 rupees and closer to around 120 rupees. The stock currently, I think, is holding at around 130 rupees. What's your view? Cheap? It's been cheap, yes, but for a reason. They're though guiding for better times ahead. Would you buy?
Yeah, I think, Nigel, one particular news item caught my eye for Z, and where they said that they are very much focused on reducing their losses in Z5, which is their OTT platform. And if they are successful over there, I think it will change the entire contours of the stock and maybe take it to a new growth phase. And I like whatever work has been done by the management so far in terms of strategy post the failure of their merger. It's becoming a more kind of a lean organization focused on cost, getting more profitability growing, and no doubt it is cheap. So I think I'm going to study it far more closely than before. I had thrown in the towel for Z, but I think I should pick it up again and look at the stock more closely. And someone with a bent of, taking contra views, for them, I think Z is a classic, I would say, template to look at working on the stock.
Got it. Okay. All right. Got that. Deepan, later on in the show, we're going to be speaking to some of these solar module, solar cell makers as well. Premier Energies is one of the stocks that we're looking at. Vari, for all those that threw in the towel, the stock did a quick fire 2,000 rupees to 3,000 rupees. Though, there seems to be that at some point of time, the street is skeptical that this entire module capacity will get into overcapacity from being underutilized. What's your view on these names, Vare or Premier Energies or any other play you're looking at from the solar theme?
That's right. I was very positive on Vari Energies and Premier, but never really bought the stock or kind of recommended it because of this exact reason. There's so much of capacity coming up. It's quite phenomenal. And it seems that the entry barriers are pretty much low in setting up such manufacturing capacity. You have the Adanis coming in, you have the Tata Group also. So I think it's going to get a bit crowded over there. And with US, preventing or rather raising tariffs for export of modules, I don't know whether the China plus one strategy plays out for this sector as well. But we are very positive on the renewable space. And the best way to play it would be through the wind energy equipment companies. There's Suzlon and there's Inox. In case you missed it, Inox is merging its subsidiary and it will become a consolidated company. And that certainly, I think, will improve the prospects, reduce the stress on the balance sheet. Not that there is much. So, and that's one product, you cannot just import it from China and set it up in India. So very positive on the the wind power equipment companies. Having said that, we have an investment in both Suzlon and Inox Wind.
Suzlon and Inox. Okay, got that. So that's how you're playing the renewable space. Always a good conversation, Deepan. Thanks so much for being with us. You have a good day and we'll connect again soon. Thank you for joining in. Okay, so it's 9:01. Pre-open rates have started coming in. And right now, we've got about a 50-point up move on the Nifty. The sensex, however, is flashing a little bit of red. So let's see what is the ultimate direction that market chooses to go in. It's very quiet right now. There you go. Those are the first rates that are coming through. So while we wait for those rates to stabilize, let's go back and revisit this issue about the excise hike in Maharashtra. Remember yesterday, all the Alcobev stocks, United Spirits, Radico Khaitan, Allied Blenders, most of them were down between 5 and 6%. So what's the way forward from here? We've got Amnish Agrawal joining in from Prabhudas Leeladhar to give us some perspective. Amnish, good to have you on the show. So the hike is obviously pretty steep from, I think, 3 times cost of production. Now it's going to be 4.5 times cost of production for IMFL. It's come after many years. But how should we, understand the impact? Because these companies will also have partial benefit. United Spirits has said that they will benefit from the fact that the duty on the imported scotch from the FTA, UK FTA, there's that benefit as well. Just take us through how the numbers stack up.
You see, if you look at in totality, there are two things which have happened. First being the increase in the excise duty. This increase in the excise duty, I think what we should think is that it can have a chain reaction. Chain reaction in the sense that in India, excise duty on liquor, it's a state subject. Now, if one state usually increases excise duty on liquor, then one can expect that there could be more number of states who can come forward and increase the excise duty on liquor in the, you can say, this year, next year, so that opens, you can say, floodgates for that. That is one. The second is that under the FTA with UK now, the duty on the imported scotch will come down, which is used on two things. First of all, it's used for blending with the you can say the ENA over here to create whiskey, or you can say other products. That is one. And the second is that companies like United Spirits now, they are having these you can say bottled in origin products, which actually practically you are selling by importing all their global brands. So while such companies will get some benefit of, you can say, in the imports, but I don't think it is going to actually completely, you can say, negate the impact which will be there due to the increase in the excise duty.
So which does mean that obviously it'll have to be passed on and there'll be a price hike, right? And that's the street's fear. What will be the ultimate quantum of the price hike? How much will the companies absorb? Will they just simply pass on the entire excise piece? And then whether demand will be hit. So what do you say to that? And what's your estimate saying?
You see, I can't give you any estimates because I'm not covering the liquor stocks per se, so I don't have a rating. But suffice to say that when it comes to, say, the consumer companies or liquor companies, are they in a position to absorb any excise increase of this quantum? The answer is no. So large part of it is going to be passed on to the consumers. That is one. And usually we have seen in the past that whenever the increase in your duties happen, there is definitely some impact on the demand, which might happen, say, for 1 quarter or 2 quarters, depending upon how the consumer absorbs. So I think for the next 1 or 2 quarters, we will see definitely the impact of this. And given the fact that Maharashtra has got very high proportion for, say, United Spirits and might be there for, say, some of the other liquor companies. So to that extent, the impact will come on the, you can say, performance of these companies.
Okay, all right. Hi, Amnish. Good morning. Good to see you. You track Asian Paints, right?
Yeah.
What's the view out there? There was a large trade that recently just took place a few minutes ago. That was something the street was bracing for. Any view on the counter?
Can you please repeat?
Asian Paints. Asian Paints, there was a large trade, 3.5% of equity did change hands. The street was anticipating that. That's out of the way. What do you think? Peak competition behind or peak competition ahead for the company?
Okay. You see, we have negative view on practically the entire paints industry from quite some time, and it is not because, say, X company is good or Y company is bad. It is because the industry is undergoing a structural change. And when I'm saying structural change, it means that the competitive intensity which we are witnessing now or which we might witness in future will be very different from what we have seen in the past. And this is more because it is not that, say, for the first time any, you can say, new paint players have entered. We had all the MNCs which came to India who tried their luck. But this time around, the situation is very different. We have a player like, say, Birla Opus, which is practically Grasim, who has put in, say, 10,000 crores of capex. Then we have got JSW, which is looking at dying, say, Exo. So another, you can say, large corporate house with deep pockets. We have got JK Cement, now which has now also started advertising. Similarly, Pidilite is there in the economy segment with Haisha. Astral is there. So as against an established 4-player kind of an organized market, now that number from 4 is likely to go to maybe 8, maybe 10. And unless and until there is a significant acceleration in the growth rate, everyone is going to get some kind of a hit here or there. Because if you look at, say, in the last 10, 15 years, earlier paints used to grow, say, 1.6, 1.7 times as an industry, as a proportion of GDP. Now, over the years, that has actually come down to something like, you can say, it's not more than, say, 1.1 or 1.2 times. So I think this is a very, very structural change which has happened. That is one. there is very little room in this kind of a competitive environment for the companies to expand the margins or profitability significantly from here. And if you look at the stocks, I think particularly say, for example, you refer to Asian Paints. So even after we factor in all these things, even if we presume that the volume growths are going to be pretty decent, mid to high single digit kind of a number, our profit growth is unlikely to be, say, more than, you can say, mid to high single digit, because the margins don't have any room and the stock is not inexpensive. It is, I think, still trading at something like 44, 45 times at least. So there is no element of re-rating which is left in majority of the paint stock, except the companies where the stocks have got de-rated massively over the years.
Sure. Got that, Amnish. By the way, in the pre-open, the one stock to watch out for is going to be Sterlite Technologies, and that is because of this large BharatNet order. They are, of course, one of the participants in the overall chain. The other is Dilip Buildcon, which is probably doing the EPC work. And Sterlite on the back of that order is up a whole 10%, looking quite good. Otherwise, the pre-open has settled down quietly, and we have a 23-point gain on the Nifty. Amnish, since the stock came up on the screen just now, this BharatNet order, I don't know if you've had a look at it. Any thoughts? Sterlite Tech. Tejas is the other one. I mean, Tejas usually has been very active in the rollout of all these optic fiber networks and mobile connectivity, broadband connectivity. Your thoughts on any of these and the potential beneficiaries of the BharatNet rollout?
No view on this.
Okay. All right. We'll leave it on that note, Amnish. Thanks very much for joining in. That's a view from Prabhudas Lilladhar coming through. So a little quiet on the market. Let's just check on the Nifty. I mean, which are the stocks that are pulling it higher? ONGC is up 1.5%, pretty much on expected lines. Been sentiment move with oil at 70, which reminds me we should check the OMCs. They're down about 1% or so, not too much, but 1 to 1.5% lower on BPCL, HPCL, and IOC. Well, with that, let's move on and get to our 9-10 calls. We have our technical experts back with us, Sudarshan as well as Mitesh. Sudarshan, what's your 9-10 idea?
It's Chambal Fertilizers, buy with a stop under 554.
Okay, Chambal Fertilizers. And Mitesh, what about you?
Yeah. I'll go with the buy on Gas Authority for targets of 210.
All right. Thanks for that, both of you. Let's quickly move on and focus on some more stocks. Now, we spoke about the BharatNet, beneficiaries. That's one part of the market to watch out for. The other is going to be MCX and Paytm. Let's revisit why these stocks are important to look at today. Vamakshi is here with a recap. Vamakshi.
Well, it would be, first up is MCX. The stock will be in focus today because keep in mind that NSE has now received SEBI's approval to launch monthly electricity futures contract. And in turn, it has become the second exchange to get a nod after MCX got the nod earlier this week. Keep in mind that, SEBI had already granted an in-principle approval to NSE about a month ago, which the company then confirmed in a Q4 con call. And they also added in the same con call that the NSE has an advantage in this market due to its advanced technology as compared to some of its other players. Now, the approval for NSE was expected to come through, but overall, this is a sentiment negative for a company like MCX because of the kind of competition that could come through from NSE. So therefore, the stock could react negatively to this news flow today. The next counter we're watching out for is Paytm. Keep in mind that the Finance Ministry has gone ahead and clarified that there is no plan to levy MDR charge on UPI transactions. Keep in mind that MDR is the merchant discount fees. It is actually the fee that is charged to merchants for accepting digital payments. Usually it is a percentage of the transaction amount. Currently, there is no MDR that is applied to UPI as well as RuPay debit card transactions, but the reintroduction could have been positive for Paytm, allowing it to monetize its payment gateway services more effectively. This, however, is not coming through, so therefore it's a negative for Paytm. UBS, in fact, has a neutral rating on this counter, target price of 1,000. They too say that this is sentiment negative for Paytm. They're building in 1 basis point contribution to Paytm's net payment margin from either introduction of MDR or increased incentive as compared to the budget. But in the absence of both, they see a downside risk of almost 10% to the adjusted EBITDA for FY26 and 27. So therefore, Paytm too could see a fall in today's trading session.
It is down. It's actually 5% lower, Paytm. Yeah, absolutely. Got that, Vamakshi. Thanks very much for that. So yeah, several stocks. I think the index is quiet, but a lot of stocks probably going to be driving the action.
I just want to take a quick look at BSE as well. I mean, BSE I think was the other one which was down a little bit yesterday. Those volumes down was the news, and although it came off the lows yesterday, it's been I think top performing NSE 500 stock by far. 0.75% lower this morning. Let's talk about some block deals as well. Vivek is here with what we're seeing, Eternal Asian Paints, C Info. Vivek, take it away.
Well, that's right. Gush of block deals today. What we've actually seen is a couple of block deals that actually happened in the pre-open window itself. But we'll just go through the key block deals that are expected today. First up, C Info Systems. We accessed the term sheet last evening. PhonePe Private is looking to sell close to 5% equity. Floor price at 17.50 a share, so almost a 10% discount is expected there. Expect the stock to open in the red. Deal size of over 470. Eternal saw a large block deal happen in the block deal window itself, over 60 lakh shares, and this particular block was worth over 150 crore. But the biggest block deal that happened already as far as the block deal window is concerned was in Asian Paints. 3.64% of the total equity has exchanged hands. The total size of the block is well over 7,700 crore, and this particular deal happened at 2,201 rupees a share. We'll wait for later on, in the evening when the block deal data is updated on the exchanges as to who are the actual sellers and the buyers in this particular large block.
All right. I think we've got, just a couple of seconds to go as far as market opening is concerned, and then we'll get right down to it, look at indices, and then we'll look at individual stocks, etc., which are starting up. So it's flat. I mean, 20 points, 25,164 on the index at this point in time. So first rates coming up anytime now. As always, I don't think one can sort of ignore what's happening in the defense sector, defense space. One way or the other, there is so much news flow, global or local, and that keeps sort of hitting the tape. So keep an eye out on that pack. Otherwise, I mean, it's limited in that sense with some more single stock kind of news, which is like Paytm, etc. What do we have? First rates, 25,132 on the Nifty. The Nifty bank is at 56,440, absolutely flat, unchanged. The sensex is flattish as well. The small cap index is absolutely flat, 18,800. You got the mid cap index, which will come up on your screen, which is, it's a flat open across the board, no doubt about it. Market breadth right out of the gates is looking stronger, but we'll let that settle down a little bit. The heat map, will it be as kind of sort of flat as well, with not very much by way of change? Red, green will give you a quick sense of what the Nifty 50 stocks are opening up like. And then we will look at individual names where perhaps I think one can hope to find a little bit more in terms of price action, price moves. More down than up right now is what you have. Some 30-odd names are lower. Some 20 names are starting the day in the green. Surabhi.
Yeah, about 12 points lower on the index right now. Infosys, HCL Tech, Tech Mahindra. So IT is definitely driving it lower. Coal India is down. M&M starting off sluggish, 0.25% lower. And then there's TCS and L&T as well. So largely speaking, the problem for the market right now is only IT. Other than that, things are okay. In fact, Reliance was trying to pull the weight on the upside to counter the IT downward drift. Pharma seeing some buying. Market seems to be getting into a bit of a defensive mode. So Cipla, Sun Pharma, Dr. Reddy's, these are your big winners on the Nifty this morning. ONGC for obvious reasons, because crude oil prices have spiked up overnight. So 2% up on ONGC. Asian Paints, which has been in news because of this big block trade, it's moving higher quite nicely, actually. 2% up on Asian Paints as we see it right now. So that's pretty much where it is. But I just want to point out that I think the two stocks of the day, one on the way up and one on the way down, Paytm, look at the crash, 10% lower straight away, because there is no increase in MDR happening as of now. So that's on the way down. And on the way up, Sterlite Technology celebrating the BharatNet order. So it's all individual stocks that are getting the headlines today.
Well, that's right, Surabhi. A few more stocks that are moving quite well. Sterlite is up and about. You have Tanla. That stock as well is higher in today's trading session because they will be considering a buyback in the next few days. So that one, in fact, is doing well. SEPC, a smaller name, don't track it very often, but that stock, in fact, is higher because they won an order. I think ONGC as well as Oil India, both of them are higher in today's trading session. You have the positive rub-off from crude oil prices, so the street likes that. Explains why both those two are doing well. Let's pull up MCX as well. Lower volumes in comparison to April. Also, the NSE has got the green signal from the regulator to go ahead and launch electricity futures. Remember, MCX had celebrated that piece of news a few sessions ago. So that's pulled back a little bit. Let's pull up BSE. What is that stock doing today? Remember, yesterday it was a little bit lower, but I think in today's trading session, yes, it's down another 2.5%. So volumes falling out there. It's been moved into the ASM as well. Explains why that particular counter, is lower. And just pull up Vedanta as well as Hindustan Zinc. There seems to be a bit of a pair trade out there. Hindustan Zinc the last month has outperformed. Will it be Vedanta's time to shine from here on? We'll keep an eye out on both those two names. Hindustan Zinc, in fact, from yesterday's high actually had corrected close to 2.5–3% or thereabouts. So
Nigel, you mentioned the oil companies moving on the upside because of crude higher. That's ONGC and Oil India. But now the pressure is beginning to show on the downstream guys. HPCL, for instance, it's down 3%. They opened flat, but now there's pressure. HPCL is leading the pack on the way down, but even IOC and BPCL on the lower side today.
Okay, well, I think there is a fair bit which is coming on, and it's all about individual names, individual stocks, etc. Right now. So BSE is the second biggest volume-led loser. I was talking about this in the, just before open. 28.30 on BSE after yesterday's, I think, 4% cut. We mentioned, of course, MapMy India, which is down 7. Paytm, of course, still down, was down 10, is down about 9%. Our power has had a breathless, non-stop, uninterrupted move, and our power is up 21% this month. It's up 65% this year. That is Reliance Power. It's down 1.5%, at least to begin the day. I think we mentioned CDSL. CDSL is down 2%, so 1,700 on CDSL at this point. Infosys is down about 1.5%. MCX is down about 1%. HPCL is down about 3%. BPCL is down 2%. So these are all essentially related to the oil price spike that we saw in a trade yesterday. And of course, the oil producers are the top gainers, Oil India and ONGC. Sterlite Tech has been a huge kind of sort of underperformer over the years. Is up 13% on this news flow. Let's see if it lasts or starts to fade. But that is what we have. Radico, I think, recovering a little bit. Radico is up about 2.5% at this point. I mean, I think sold off a little bit yesterday. So that's the bulk of volume-led moves that we have at this point. Market breadth is a little over 2:1 in favor of advances. 25,168. Gautam Shah is with us, founder at Goldilocks Global Research. Gautam, great to have you with us here on the program. Thanks very much for your time. So 25,116 basically was the top end of that range that we were looking at, and the market, had been in that range for a while, sort of broken out. But the argument is still on whether it is convincing enough, and there is enough in the tank for the market to make new highs on the Nifty. What's your sense? Has the road cleared up in that sense?
Good morning, Prashant. Well, yes, I think this 25,100 area has actually become quite popular. And I think a lot of people who track the Nifty and the large caps have become quite restless, in fact, even frustrated, because the headline indices have really gone nowhere in the last 3.5 weeks, whereas the broader markets have been in tear-away mode. This is classical bull market characteristics where you see market cap rotation, and I think this is going to continue going forward. As a technician, I always look for overbought signs or topping signs. I don't see any of that right now. I think the market remains structurally strong. We've obviously digested a lot of news flow in the recent past. The momentum is great. And you have the broader market indices a few percentage points away from lifetime highs. So given all of this, I don't think the Nifty can stay in its slumber for too long. 25,200 is actually now the working number that we are watching. And once that number is taken out on a closing basis, I wouldn't be surprised if the Nifty starts marching towards that level of 26,200, which is the lifetime high. So I think one stays bullish, ride the trend, do not overthink, do not overanalyze, and just participate in quality names.
Okay, Gautam, hi, morning. I missed the number. What is the close above what level that you think the march to 26,000 will start?
I think 25,200 is the important number for us now based on multiple technical studies. And once we see a good close past the same, I think we are headed towards 26,200 with a stopover at 25,600.
Okay, so basically a whole 1,000-point upside from here is what Gautam still sees is on the cards. That's good to know, because every time we get into this prolonged consolidation, then mid-caps start falling as well, and you wonder what's happening with the market. So now you spoke about sector rotation. So give us some more clues on this, because there have been patches where the old winners like defense stocks, they've still done well. Tell us what the charts are saying there, and where do you see signs of new leadership?
Well, I think the leadership clearly emerged from the banking space. I think the bank Nifty has seen quality consolidation in the last couple of weeks, but still seems to be super strong on the charts. I think our near-term working target is about 58,000. And for a very long time, we've been talking about 60,000 on the bank Nifty and the entire financial services space. So the banks, the NBFCs and the insurance companies, the housing finance companies, I think they all look good. So I think if the Nifty has to break out, banks will have to participate once again, and it will probably trigger the breakout. So I think I would be very, very bullish on the entire financial services space, and I think this is a trend for the rest of the year. This will be followed by metals and real estate, which has been our favorite all along. I don't change my views and preferences very often. So I think real estate and metals are on top of the list for me, and I think it will do bigger things. I think we will also see some participation from the IT space, which has seen some uptick in the last couple of days. So that's always welcome. But I don't think the IT index is going to be a big outperformer. And with Reliance having lost its underperformance, which is good news for the market, because even that stock could be gradually moving towards 1530. But the real opportunity is mid caps and small cap. Broader market is the opportunity, not now, but I think for the rest of the year. So forget the headline indices and focus on the broader markets.
All right. Hi, Gautam. I wanted to just come to that itself, because that's what makes portfolio looks good, right? The headline index could consolidate a little bit, but broader markets have been doing a thing of their own. Tell us any kind of levels you're looking at in both the indices, the small or the mid-cap index.
Well, it's quite incredible that the broader markets witnessed a bear market for about 6 months, and the average decline in the overall market was about 40%. So we actually came out of that kind of damage. And today we are a few percentage points away from lifetime highs on the broader market indices. So I think the mid-cap 100 index, our working target is about 61,000, which was the previous stop. It could take a bit of a breather there, but once that number is taken out, I think a 65,000 is easily doable. If you look at the small cap 100 index, that's also setting up beautifully. In fact, the last 10 days, you're seeing a higher high every day on these indices, while the Nifty has been absolutely range bound. So I think that says a lot. But I think on the small cap index, our working target is about 21,000. So that's good 10% upside even from here. And I think you are seeing a relay of sector rotation even in broader markets. I mean, there are various pockets of the market doing well on a regular basis. We saw capital goods come back. Infra has done well. Sugar and paper have started to come back really well. So I think this is a good place to be in. And I think with US markets very, very strong, it just helps India do its own thing.
Yeah, I actually was just coming to that. The fact that globally as well, markets have just gone on, unfazed, right? Tariff issues, wars, falling bombs, drones. Markets have just continued to march higher. Do you see, anything changing in the global setup, the dollar, or whether it's the US 10-year yield and the mother market itself? What are those charts telling you?
One clear learning from the last 5 years is that the best opportunities are in the most difficult times. I think we saw that in the COVID period, and we saw that a couple of months back when we had the geopolitical scenario and people thought that that's going to derail equity markets. Did not happen, and I think markets beautifully held on to support levels. If you look at the US markets, they've also seen a beautiful V-shaped recovery in the recent past. The S&P is at the doors of 6150, which I think will be tested and probably will also get crossed. And I think many of the top stocks there continue to be quite solid. And in fact, even the Russell 2000, which is the broader market in the US market space, also seems to be doing well. So with the mother market quite safe, Europe in top form, Asia doing relatively well, and India having its own positives, and the fact that we are still 4 weeks away from the next earnings season, I don't see anything on the horizon that can really derail this market. So pausing and going up is good. I think every bull market has this beautiful framework of run, pause, and run.
And what about oil? That's a sudden surprise. $70, and the Americans are moving some of their personnel out of the Middle East, and suddenly everyone's looking at Iran. I don't know. Are the charts indicating anything ominous on oil?
Not really. I think it's seen a bit of an uptake, but we remain neutral to negative on oil. I think $63 to $75 is where oil is going to stay. And actually, as a technician, I'm very happy if oil stays range. So I don't want it to go up too much. I don't want it to go down too much. And I think it's going to remain this way. But I think the point that I highlighted in our last interaction, that the real opportunity is in the precious metals. While gold is taking a bit of a breather, look at what silver has done in the last 10 days. That's been our high conviction idea at Goldilocks for a while now. And I think it's ready to do bigger things going forward.
No, absolutely. Tilaknagar Industries, right? I mean, that's I think the big mover. It was not there in a big way when we started, but I think it's up 6% now, 7%. The graph should come up on your screen. So 370 on Tilaknagar with, and is, by the way, the fourth largest volume-led gainer on the NSE. The other one, which I think has picked up pace quite a bit, is Suvain. Suvain was again, it's gone up very sharply and quickly. So 268 on Suvain, 8.5% gain. And of course, I mean, I mentioned Tilaknagar, but take a look at Radico as well, which has picked up. It started higher, but it's up another 3%. It's basically up 3% on the day so far. It's really become about. It's become very disaggregated, Gautam. You'd agree, right? It's about individual stocks here, there, because the pickings are slim, so to speak. From a fundamental perspective, I don't know maybe how you look at it, how you look at things technically, but except defense, where there perhaps is a big tailwind, a broad tailwind, right, where you could sort of work to build, buy a bunch of them and kind of hold on. Otherwise, it's very disaggregated. Would you agree with that? And if yes, run us through some individual setups that you really like in the market, broader markets.
Well, absolutely. I think it's a stock picker's market. I think that's something that I've maintained for the last couple of months, because even if the Nifty does well and moves to lifetime highs, it's a 4% move. So it's actually nothing special. And with FD rates, on the downhill, it's very clear that more and more money is going to come into the equity markets going forward, given the stability and the strength of the recent past. So I think a stock picker's market is actually a good place to be in. Sadly enough, grade C and grade D have also done well in the last 2 weeks, which is a bit of a concern for me. But at Goldilocks, we only look at super solid companies fundamentally and technically. And I think the entire infra space looks very interesting to me, because if you have to play the India story, you can't let go of infrastructure and power. So I think these are two pockets that we like, and the top 4 or 5 names in both of these sectors look very good to us. I think they could generate 25 to 30% upside over the next 6 to 12 months. So that's something that we are focusing on in the broader markets.
And just to round the conversation up, what we started with, what about defense? I mean, does it still have some steam, or do you think there are some signs of fatigue or topping out here on these charts?
I think there are very clear signs of fatigue. In fact, I will want to believe that there is a greater fool's theory that seems to be playing out there. Anything and everything seems to be justified. And I think this has to end at some point of time. I'm not saying tomorrow, but I think these are not levels where you can make serious commitments in defense. I agree it's a great story for the next 5 years, but for investors, there are some amazing opportunities across the board. So why commit into defense? In fact, the entire PSU basket, the PSU banking basket, we like. I think that's a theme that's going to play out beautifully. Valuations are comfortable, charts are great. They're all coming out of 3 months of consolidation. So I would definitely recommend investors to look at PSU stocks seriously.
Yeah, no, absolutely. And PSUs, PSU banks, but not limited to defense, as Gautam said, perhaps is a way to go at this point. Sterlite Tech, 14% pop now. Reddington is coming up with about a 5.5% gain. Ajanta Pharma is up about 3.5%. HOEC is up about 2%. So lots of new names in addition to what we've been sort of highlighting earlier as well. Thanks very much, Gautam, for joining us. It's a pleasure and always good to listen to you. Thank you.
Thanks, Prashant.
All right, let's now move forward and let's bring in the management of Tata Power. Dr. Praveer Sinha is MD and CEO at Tata Power. They've been aggressively, of course, focusing on solar manufacturing and renewable power. Their Tamil Nadu solar facility has crossed 4 gigawatts solar module production, and some of these developments and demand trends is what we're going to talk about. Dr. Sinha, thank you very much for joining us. Great speaking with you, as always. Now, solar equipment exports are looking very lucrative, according to many that we've spoken with. Will you explore this, sir? At the same time, US has imposed tariffs as high as about 3,500% on select Southeast Asian countries. As I preface my question, you have about 4 gigawatts of capacity. So exports an option?
First of all, thank you for having me on your show. I think what we need to look at is from a long-term perspective. There may be certain windows in which it may be very attractive to do exports of solar cell and module. But as we had mentioned earlier, we have our internal commitment. We have a lot of DCR modules that we need to supply. These are for third party as well as for our own projects. And we need to first cater to that. And then if we have some additional capacity beyond that, we will definitely explore the opportunity of exporting. But those will be, again, very small quantities and not very large quantities that we are looking at.
Hi, sir. Great to have you on the show. So, I mean, the question that we come back to is that how are you managing that ambition of net zero versus energy security? We understand that you're looking to ramp up thermal, at least in the interim, versus the prior aim of solely focusing on renewable capacity addition from here on.
So we have always believed that energy security and energy reliability are very, very important aspects. And that is why our initiatives on pumped hydro and some of the energy storage projects are going on. We do expect that we will be able to cater to the 24/7 clean energy requirement through the pumped hydro and the hydro projects that we are setting up in Bhutan, as also in our existing hydro locations. And if we get any good opportunity in other areas, we of course keep on exploring them.
Dr. Sinha, this is, of course, a question which comes up every summer season. Your view on India's demand-supply scenario, sir. How do you see prices panning out? Where do you see attractive investment opportunities? Are we well equipped to meet anticipated peak power demand, both short and in the longer run?
So I think the capacity addition that has taken place in the country in last few years has been phenomenal. Last year, we had a capacity addition more than 30 gigawatt, primarily through our solar and wind projects. We do expect that going forward, we will be in a position to meet our peak requirement. This year, the target was 270, but I think we have not crossed 250 gigawatt. But looking at the type of capacity which is available, especially during the solar hours, we may not have any challenge in meeting the peak power requirement. The energy demand, again, is a function of the weather patterns. We have seen very different type of weather patterns this year compared to last year. We had a very rainy month of May, which was not anticipated. So let's see how the rest of the summer months pan out. But I can tell you that the demand of the country has been growing at an average of about 5%. And we do expect that going forward, this sort of demand will continue to be there, considering the extreme heat conditions in many parts of the country, as also the requirement from industrial and residential consumers. So the power requirement will continue, and we are quite confident that the requirement will give us the opportunity to set up more plants, more power evacuation, and more distribution opportunities.
Okay, got that, sir. Of course, renewables is a big focus area for you. What about the outlook for solar EV battery charging and the EPC business going ahead?
So the solar EPC businesses we have been doing for last many years. Of course, now that we have our own utility scale ambitions, where we will be adding about 2 to 2.5 gigawatt every year, our first focus would be to cater to that requirement, and only after we have catered that requirement, we'll look at third-party opportunities. And along with that, we, of course, are growing at a very fast pace in our rooftop business, which again requires not only supply, but also erection commissioning of rooftop for retail consumers right across the country.
Dr. Sinha, DISCOM privatization, again, something we've sort of spoken about this in the past. You've been keen We understand you're looking closely at the Uttar Pradesh Discom privatization process. Can you tell us if you indeed are looking at it? You're going to throw your hat in the ring?
So, from what we understand from the government, the RFP document is expected in the month of June. We would be definitely bidding for both the discoms. I'm told that each of the discoms have been categorized into 2 or 3 opportunities based on the geographical location. And we would be bidding for all of them. We are confident that based on our experience in Odisha, where we cater to both rural and urban areas, we are very qualified to do a similar work in UP and provide better quality service to the consumers of UP.
All right, got that point, sir. So obviously, I mean, your 2030 targets are fairly ambitious. You're looking to add a lot of capacity as well. So just give us some sense, I mean, in the near term, how are you seeing the trajectory on the top line as well as the margins?
We are very much on track. In fact, we may end up doing much better than our stated goals. And we keep on revisiting the numbers based on our actual performance in the years. And I think we are confident that not only we'll meet those targets, but also improve upon them.
Dr. Sinha, at the end of the third quarter, when we spoke to you, you spoke quite extensively about the opening up of nuclear power to private players. Could you tell us what is the status? Has anything moved? Any new interactions with the government?
So, from what we understand from the government, the amendment to the Act, both the Atomic Energy Act as well as the Civil Liability, is expected to go for approval in the Parliament, in the monsoon session of the Parliament. And we expect that thereafter the new rules and regulations under which the licensing will be done for the setting up of the plant as well as for supply of the raw material, that is uranium, and its processing will be done. So we are very confident that once we get better clarity on it, we'll be in a position to go ahead and implement some of these projects.
Okay, got that. So finally, let's get an update on Mundra as well. You're currently running on a cost-plus basis over there, and I think Section 11 is still in effect. Can we expect to see any long-term PPAs in the near future?
So the plant is running under Section 11, and we have been engaged with the governments to come to a solution which is fair and reasonable to everyone. We do hope that we'll be able to strike a balance and finalize it quickly.
Okay. All right. Well, thank you very much for giving us all of the updates and the details on the business. As always, good luck to you and the team. We'll take a break on that note, come back on the other side, and we'll have Vinod Agarwal of VE Commercial Vehicles to talk about the May auto sales and the outlook for the rest of the year. Welcome back. Let's talk about Volvo Eicher Commercial Vehicles and the way those sales numbers have been shaping up. May auto sales have seen a healthy trend. Commercial vehicle sales trends has improved pretty much across the industry. Let's talk about the numbers at VECV as well. For the month of May, there's a year-on-year increase of about 7% for sales that the company has reported. We have with us Mr. Vinod Agarwal, Managing Director and CEO at VE Commercial Vehicles. Mr. Agarwal, thanks very much for joining in. So, it's heartening to see that for you and for players like Ashok Leyland as well, finally some green shoots seem to be occurring. Can you tell us which segment is showing revival? What do you expect? Because we're also now getting into peak monsoon, where mining activity pretty much, sort of comes down. So what's the forecast?
First of all, I think it's a very good sign that till now the industry has been doing all right, even though we would have expected slightly better growth rates, even though the industry is growing. So, like for example, in the month of May, the total CV industry 3.5 ton and above, the growth is around 4.9%. And even though we have grown by 7% plus, and YTD also we have grown by 16%, whereas the industry growth is still around 4 to 5% only. So first of all, we are continuing to do better than the industry this year as well as in the previous years. Then, of course, this growth is also due to some pre-buying happening because of the air conditioning that is applicable now on cabins from 8th of June. So therefore, some pre-buying also has happened. So we are expecting that the growth will continue because there are good fundamental reasons for this growth to continue. For example, the replacement demand we are expecting that will remain very, very strong. And then we are also expecting good monsoon. And we are expecting the economy to grow. And the interest rates are going to go down. As we have seen in the recent monetary policy, the interest rates have been reduced by 0.5%. So therefore, that's a very positive sentiment for the industry.
So Mr. Agarwal, all of these things put together, give us two estimates. Where do you see the industry growth, total CV industry for this year? And where would you be? I'm sure you'll be above industry, but how much above industry this year?
No, it is very difficult to pinpoint that how much will be the growth. We can only look at the trends and we can look at the fundamentals. So if you look at the trends are positive and fundamentals are strong. Therefore, we are expecting that the industry will grow. However, to say that how much it will grow, it is very difficult. My own broad expectation will be, it will be single digit only. I don't think we will grow beyond double digit growth. So it will be single digit, maybe between 5 to 10%.
But then you will grow in double digits, right? Because you're always growing above industry. Even though the first 5-month trend, you're already growing 16%. Yes. So full year also we should expect double digit growth?
Let's hope. That's always the strategy,
Okay. Give us a sense on, like I asked, the segments and also what the bus portfolio is doing and which are the segments where you're seeing better traction.
Buses are doing very well. In fact, last year also the buses have already touched a new peak. Last year the total bus industry was 95,000. And we also grew very well in the buses last year also. We sold more than 20,000 buses last year. And this year we are continuing to do very well. In fact, first 2 months we have grown by 30% plus. So our market share in buses have grown significantly. And of course, we are also expecting that the industry for buses will also continue strong because we are experiencing strong replacement demand from schools as well as from the staffing segment. And we are also expecting strong intercity coaches demand and also the route permits. So therefore, overall bus industry is expected to do well. And we are also expecting that the electric bus tender, which is going to be opened very recently now, 10,000 plus buses. So therefore, buses are expected to do well. And other than buses, light and medium duty trucks also have grown in first.
Sorry, sir, just to come in over there, this electric bus tender that you mentioned for 10,000 buses, this is coming in NCR, which is the state?
I think there are various states in that. It's not in one state.
Okay.
There will be a few states in that.
Okay. And since we're talking electric buses and EV, this whole rare earths, magnets, I mean, it's a huge issue for the passenger vehicle segment. I'm not quite sure if it impacts CVs or your particular electric commercial vehicle plans in any way or electric bus plans in any way. If you could tell us more.
No, that's a big challenge currently going on for the entire auto sector. It's not only for CVs, it's for the entire auto sector. So therefore, I think through SIAM and ECMA, a lot of discussions are happening through Government of India and also our embassy in China. And so a lot of applications have been made to get the permissions from China.
So, can you tell us specifically for Volvo Eicher CV, what is your current EV capacity? What is the ramp up you're planning? And will it impact your EV production?
For example, we still have stocks, there are always some stocks in the pipeline. So we will have stocks for around maybe 3 months, 2 months, our stock as well as supplier stock put together for magnets. Now, worst come to worst, if suppose these permissions don't come, then we will have to import the full component because there is no restriction on import of full component. And if we import full component, then the cost will go up. So therefore, it's a big challenge. But of course, there are some magnets which are put in, for example, if it is put in some sensors, then that is not possible to import full component also. For electric vehicles, we can import maybe full motor we can import. But some of the parts of maybe passenger cars or for our trucks, that may not be possible. So therefore, it will be a challenge if the problem is not solved in next 2 to 3 months. So there is a lot of discussion happening. So let's hope that it will get solved.
Yeah, absolutely. Speaking of costs, give us an overview on other inputs, steel, other raw materials. I mean, how are input costs behaving for you, and what is the outlook on margins now as we go forward in the year?
That is another challenge because government has put the safeguard duty on the steel,
Correct,
which is 12%. Now that is proving to be inflationary. So as soon as the duty was put, all steel mills have increased the prices. The first quarter, the prices have gone up by almost 2.5 rupees per kg for steel. Now, of course, that is again a big challenge that the safeguard duty is proving to be inflationary. So there again, I think the industry is in discussion with Government of India that the safeguard duty is not good for the industry. This is going to be inflationary. As it is, we are facing the inflationary pressures or cost increase pressures because of the additional cost of ACs. Now, the ACs have become mandatory, so we have to increase the prices. Because of that, now we have to increase the prices because of steel. So therefore, this safeguard duty, I think, is not good for the industry, for the auto industry. So these are the current challenges which are going on.
Got it. So those magnets and the price of steel, of course, steel makers got that duty after lobbying for months and months and months. But as a consumer, I can understand your concerns as well. Thank you very much. It gives us good perspective. So thanks for joining in. That's Volvo Eicher saying 3 months of supply is there when it comes to EVs and these rare earth magnets. After that, the industry will have to see.
All right. Well, let's move to our next conversation. Premier Energies, that's the one on our radar. The large trade that did take place a couple of sessions ago, South Asia Growth Fund sold around 5.5% stake. Let's talk more about this trade and also how they see business momentum going ahead. We have with us Mr. Vinay Rustagi, the Chief Business Officer at Premier Energies, who joins in. Hi, Vinay. Good morning. Thanks a lot for joining in. Well, this large fund, they went ahead and they sold half of what they hold. Any kind of communication from them? Do they intend to hold on the remainder of the stake that they have? Or have they given you all a timeline that within this time they want to get out?
So sure. Good morning, and thanks for having me. As part of the process, the fund has given an indication that they will retain their balance equity for the next 5 years. For the next 5 months at least. In any case, I think, from our point of view, we are pretty neutral. What does the fund decide? Because we have a pretty liquid pool of large marquee shareholders, and the business is in a very strong footing, irrespective of what the fund decides to do with the shareholding.
Okay, all right. So for 5 months or that, I think that's a cool-off period as it is. So
That's right.
We'll have to wait by to see. But as you're saying, there's enough of interest in the stock, which brings us to the next question. You've put out a capex, a large capex, I think of around roughly around 12,500 crores approximately. Could you break it up for us? How much of it will be debt? I think you have some cash in your book. So if you could quantify that. And at peak, I'm looking at a brokerage note. They're estimating that your peak debt will be around 4.5 to around 5,000 crores. Do you concur?
So, those plans are still under development. You asked for the breakup of the capex. So what we are doing is we are currently almost doubling our capacities, what we have in terms of cell and modules. We are going up to 8.4 gigawatts and 10 gigawatts over the next 1 year. And then we are also going backward integration into ingot and wafer manufacturing. So together, the bulk of the capex, I would say 90% of the capex is going in these businesses. And then we have announced additional forays into battery storage and inverter manufacturing. And there we will consume about 800 crore rupees of cash. In terms of, you mentioned how we plan to fund this capex. So our intention right now, because the company is sitting on surplus cash and generating a lot of cash in terms of internal accruals, our intention is to fund this with internal accruals and some incremental debt. We want to be pretty conservative in terms of how we manage our capital structure. We want to stay at the boundary condition that we have set ourselves is about 1.5 times debt to EBITDA, which is very, very conservative given the overall industry dynamics.
So just to break this down, sir, you have currently 2,000 crores of cash.
Correct. That's right. Yes.
Internal accruals will be another, say, 5,000 crores approximately, which means that the peak debt that you will raise will be around 4 to 5,000 crores. Will that be a fair breakup?
On a net debt basis, the long-term debt should be actually even lower than that.
Okay.
I've got that. Vinay, hi, good morning. Prashant here. With you also in that analyst meet, investor meet, put out your projections of the demand, right? As you see growing.
Sure.
For and basically you're saying that the current 25 gigawatts can double over the next few years. That's your broad projection.
That's correct.
This is 25 gigawatts for cell or module, Vinay?
So, Prashant, just to be clear, one thing what we are saying is that the current industry demand is about 24 gigawatt per annum. That's what India added in the last financial year. And our estimate is that given the growth momentum in the industry, we expect demand to grow to more than double over the next 5 years. Okay. In comparison to that, our current cell manufacturing capacity is about 25 gigawatts, and more capacity is coming online. And there our estimate is somewhere between 50 to 55 gigawatts over the next 3 years.
Is and that's the thing. So 20 demand supply are kind of evenly matched right now, right? In terms of solar cells.
No, so yeah. So let me just clarify. What happens is, what I'm saying, this current capacity of 25 gigawatt, that is the nameplate capacity. What you can produce in the best case scenario out of that is about 80%. So which would be about 20 gigawatts in the best case scenario. But the other complication is that a lot of the new capacity that comes online, it takes a very long time to stabilize and produce at optimal capacity utilization. So actual output that you get, whether it is current 25 gigawatts of capacity or let's say 50 gigawatts over the next 3 years, will be somewhere between 70 to 75% in the best case scenario. So our estimate is that the Indian market is likely to remain in balance or even undersupplied over the next 3 to 5 years.
And this 50 is 5 years, right? The demand estimate.
That's right, yes.
Okay. You don't think, so everyone recognizes, and I've spoken to many investors, not just about your company, but about the industry as such, that there's great visibility. And, your numbers, for example, show it. Fantastic numbers. And the numbers will keep coming maybe, this year, next year. But then suddenly, the fear is that there will be a sudden drop-off because there are very large players coming into the market. And as you said, only 75-80% will be the actual capacity. But the fear is that the plans are so large that even 75-80% of it will overwhelm the demand. That's the fear, Vinay.
Yeah, sure, Prashant. So I think I would answer that question in two parts. One, there is a very strong growth momentum in the solar industry. The battery storage prices have come down, which help address one of the biggest challenges of solar power. Solar plus wind plus storage is a very genuine and attractive proposition for all consumers, including discoms, and it can easily replace thermal as we go forward. So the growth momentum is very strong. The government has taken a number of steps to broad-based growth, going beyond discoms to the residential consumers, the agricultural consumers, etc. And second, we have not even factored in additional demand levers coming in from green hydrogen as well as exports. So if I take those things into account, particularly in view of the fact that the government is negotiating these free trade agreements, we believe that there is enough demand for all the suppliers who are entering this.
Okay.
So Vinay, exactly on the point of exports, and you mentioned in that investor call that exports remains quote unquote an optionality. While of course right now you're focused on the domestic market, and what you're telling us that 3 years you're fine in domestic market demand.
Correct.
Have you started thinking about exports, and then which could be potential target markets that you'd look at?
No, of course. So we are tracking the international markets very, very closely. Currently, there is a little bit of an uncertainty given the tariff discussions going on and India's own free trade agreements. But the largest markets that we believe that will open up over the next 1 to 2 years will be US and Europe. And mind you, the demand in these two regions is more than double of India's current demand. So that is a very large potential export market which is opening up.
30-second response to this, Vinay. You want to become a vertical integrated manufacturer, right? So you're going to do wafers, ingots, etc. Is there any dependence on China in terms of technology, all these rare earth minerals, etc.? Any dependence, any bottlenecks as such?
So, see, I mean, in the current supply chain is based in China, you are right. But what we are doing as a company is we are trying to diversify away. We've got enough time. We've been looking at suppliers in other countries, mainly in Europe and US. And we believe that with sufficient planning and government support, we can easily manage that risk.
All right.
Okay, all right. Let's get a couple of numbers then, sir, before we let you go. I think you're guiding for a growth of around 15 to around 20%, if I got that correctly, on the top line. Is that correct? Revenue growth?
So as a company, we don't give out any guidance. What I will say is that, our cell and module capacities are more than doubling over the next 1 year.
Yes.
And then we are entering into new business segments as well. So I can't give you any specific numbers. But we will have a strong growth momentum in the business over the next 2 years.
Since you're getting into backward integration, you can hold on to margins of around 32% or improve it?
See, again, I think there are a lot of variables.
You can give us a range, sir, because if you're getting to backward integration, ideally for any business, that means that margins will either improve or they'll stay constant, right? If you could give us a sense like that, I'm just going through a couple of numbers on an EBITDA per watt as well. Very, very roughly, for the last quarter, you would have done around 5.8. So can you hold on to something on that vicinity?
See, I'll answer that question in the industry context, because as a company, we don't give out any guidance. This is an industry where the technology lifecycle is changing very, very rapidly. And CapEx, it's very, very capital intensive. So for a business which is profitable, which wants to grow and invest, the typical return on capital that we expect is about 25%. And that is where we would want to be over the long term. But the ultimate margins will depend on a number of market factors.
Okay. All right, Vinay, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate it very much here on CNBC-TV18. Well, we're going to come back and get you an exclusive preview of a conversation my colleague Shilpa Ranipeta had with Gautam Singhania. That's coming up in a bit. Stay with us. Okay, welcome back. 70 points lower. So there is a bit of a drop-off which has happened. 25,076 is where we find ourselves at. Mitesh is with us with what he'd want you to do in terms of index and specific trades. Mitesh, take it away.
What do you think, Prashant? Not much on the index. In fact, I'm slightly worried that the breakout isn't getting any kind of follow-through and trailing stop losses have been hit. Though we haven't turned negative as yet, I think the overall setup isn't very confidence boosting. So we'll avoid the index. On the stock side, I have a sell on HUL. I think multiple times what we saw was that the stock failed around those 2390, 2400 levels and is turning down. So we'll take a tight stop at about 2375, look for a target of around 2300 on the downside. And pharma names are looking good. That's the sector, which is showing some traction. So Sun Pharma is a buy. Keep a stop at 1700, look for targets of around 1760.
Okay, I got that, Midesha. I remember you said the Nifty stop should come in at 2085, and the Nifty is just at those levels right now. So let's see how this plays out. Thanks for the advice. We'll come back to you later in the course of the day. For the time being, let's quickly shift the focus to the commodity markets. We have Manisha joining in with the latest. Manisha, what's the headline?
The crude oil prices and the kind of run-up that they have seen absolutely is a headline. The Brent price has gained up by 4.5%. It was almost 5% of gains coming in for the U.S. crude prices also. So while you have the Brent prices trading at a 2-month highs, the U.S. crude oil prices are trading at a 10-week highs on the international markets right now. Well, if you look at the Brent prices range, it has been quite a big one. We started this year with almost at around $75 a barrel, a high at around 82. We've also seen a low of $60 a barrel in this year itself, and then currently trading at around $70. So we're trading somewhere in the middle of the range, as it were, for the crude prices. Various supporting factors then, and four major. One is the rising tensions between US and Iran, especially with the kind of statement that Iran has been putting out, saying that it will strike the US air bases within Middle East if the nuclear deal does not go through. And we have seen US react to it as well by partially evacuating their personnel within the Middle East there. So this doesn't seem to be going away in a jiffy, and that's adding premium to prices there. The second important thing clearly has been about the US-China trade agreement conversations. There is an expectation that we could see the final paper very soon, and that has been supporting prices. The U.S. Federal Reserve could also be cutting interest rates in the next meeting. What is the idea that the markets are taking out with the kind of inflation data that we have seen come in from U.S. yesterday, slightly softer than what the street was anticipating, and is the reason you saw the U.S. dollar index as well decline. The dollar index, by the way, is down by 2.5% in this year itself, in turn supporting many of those prices. And the final point is about the U.S. crude stocks, which also have continued to decline. Markets were anticipating a 2 million barrels of a decline, and we've seen 3.6 million barrel actually come in, and that in turn also led to some gains into the prices. I also want to show you on what we've done in sense of prices in the last couple of months. Then April wasn't such a great month. We saw 15% of a cut coming in for the crude prices, but last month was 11% of a jump, and this month already 8% of gains is what the crude prices have given you. Also, when you look at the last couple of years, it hasn't been so great. We've seen 10% of a decline in 23. 2024 was 3% down, and this year, while we of course have led to some gains into the markets, at one point in time we were down by nearly 15% in case of crude prices, but just about 5% down for this current year now.
Yeah, no, absolutely. Thank you very much for that. So oil suddenly is taken the top slot as far as mind space goes, and as the top story as well. Let's get you a CNBC-TV18 exclusive now. My colleague Shilpa Ranipeda caught up with Gautam Singhania, the chairman of Raymond Group. Shilpa asked him about his plans for the group's engineering business. And, it's a long interview. We are only playing a small snippet of it. And we're, of course, focusing on engineering because that is the less talked about business. But he also spoke about his succession plans for the group. Listen in, as I said, to a small excerpt of that conversation.
Right now, everything is a subsidiary. We're going to make aerospace one subsidiary and real estate, auto components and engineering as separate subsidiaries. So
right.
Currently, it's a subsidiary. We'll be split into two.
Right, fine. And you stated a while earlier when we were speaking about how there is huge opportunity in this space, right? Where will it come from? Will it come from the aerospace or defense?
Aerospace is a big, Make in India is a big opportunity. So I think similarly, we're back to the China plus one story. Companies are saying that we need to have presence in India.
Right.
India is a space we have to be.
And even for this Raymond Limited now also going forward, the top line and the EBITDA targets that you have is the same 20% and 15%? Stated for every group. What are the kind of projects that you're looking at in the automotive and in the aerospace and the defense space, where you've stated that there's a lot huge opportunity?
We're looking at a lot of stuff. It's premature to talk.
Okay.
We got the Paris Air Show next week. So let's see what comes out of that.
Right.
It's a very big show. A lot of people there.
Right.
I'm going to be there next week. So I think there's a lot of opportunity. Let's just keep our fingers crossed and hope for the best.
Now we're talking about you've been running this business now for 25 years since you took over?
More. I've been running it. I've been in the group for 45 years.
45 years. Okay. I mean, at the very helm as the chairman.
26 years.
Now, when you look forward, how are you looking at the succession, Mr. Singhania? Are you also looking at bringing your children into the business?
My kids are too young. They're not going to come in, which is why I've got professional boards, professional management. Everybody's incentivized.
Right.
My daughter's 20. I don't think she's coming in for at least 5 years if she decides to come in. So we've got to professionalize the company. We've got to protect the shareholders. And that's what we're doing, which is why you're seeing this whole split up into 3 companies, 3 top-class boards, 3 sets of governance, best-in-class governance, best-in-class management, and that will ensure that, I have to differentiate between management and shareholders.
Fair enough.
I have to move back as a shareholder and get the best-in-class governance, which eventually, if I get good return on my shareholding, that's wealth creation for my family. So
Fair enough. So there is no thing about you want your children to come in that is completely...
That's a personal discussion. We can have that some other time.
All right. So the agenda is to professionalize the boards of all the 3 entities at the Raymond Group. The children will take their own call whether they want to join the business or not. That is Gautam Singhania. Well, on that note, we have to take a very quick break. Come back on the other side in our special segment, It's the Economy, coming up. It's actually Indianomics today. Lata is going to be in conversation with former RBI deputy governors and bankers on whether RBI is moving towards lowering restrictions on banks.